right, everybody, let's get to it on a Tuesday. What's happening? Big shout out to the chat. Let's jump right into crypto. Let's not waste any time. Ethereum, let's do our top 5. Not waste any time today. I'll give you guys your shout out in a second. Look, rolling over, not doing much where it should be doing things. So we don't want to screw around on a lot of this. We see markets rolling over. But what's crypto doing? It's not moving where it should move. So I want everyone to bump those stops, 1225. If it comes back to 1225, this is done for now. That's number 1 of our top 5 crypto. Number 2, Binance Coin. I still think that's a place to be looking to sell it. No matter what, 288 now, we're still trekking down, 278. Come back and test that target. There's not a lot here. And the price action shows us that. Day over day, the slide has resumed. Bitcoin, number 3, 17,000. Looks like a ceiling. Can't get above 17,000. Day 7 at 17,000. How about that? Not able to get above there, 16,992. At the moment on Bitcoin, we know where that's going. We know what this is doing. It's not, it's just a drag, it's a pause until you go lower. Number 3, the Doge. For you speculators. Again, we like the chart, but it's coming back. A couple of things. Daily HSI got rejected at 1080. The 4-hour target, target 1, looks like that. Off the bat pattern at 1080. A lot of things here to say this comes back down for now. It's a nice building chart longer term, but you're running into some things. Just be aware of that. That's 4. Number 5 was Cosmos. I think I'm going to change that. Maybe to something that is a little more relevant. Maybe a bigger market cap. But again, that 2... even with the patterns we have looked at on this, that's a 4-hour chart. This is the chart we're looking at. Beautiful back-to-back bat pattern. XA level at 950. That's where you go. Minimum. Nothing there. I mean, just the crypto run through is not a spectacular real event. And then, of course, total crypto. The total indices have not moved. Total indices like Bitcoin, you have a big HSI down there at 750 billion, but it's a sideways pause, nothing, just a harmonic pause. That's your total crypto on the daily. I still say that, like Bitcoin, they all have these lower levels, big 886 level. Really not much there. The total 3 index, you take out Ethereum and Bitcoin, even with the big patterns and everything but Ethereum and Bitcoin, you would still say, get me to 285.5 billion to hit the hop level, because there's nothing else down there. And then there's your perspective on the rest of it. 285's got to be a minimum, and then spend weeks there, literally weeks. 10, 20 weeks there. And if not, and this pattern fails, we know the deal. Full on 886, which is really, I think, the assessment across the board. What's going on, chat? Get you guys fired up. Listen, we're here Monday, Tuesday, and Thursday. Thursday's our giveaway Thursday. So hit the like and hit the subscribe button if you want to win some goodies. And on Thursday, we got some books out, more books out. So if you get a book, you win a book, do me a favor, just post it on Twitter or Facebook, whatever. Just let me know that you got the book. I would appreciate that. Even the domestic books are taking 10 days, which is insane. Anyway, thanks everybody for showing up today. Swooping Hawk, Troy Mars, Mr. Lodak, Bob Walters, Miss Stephanie, how are you? David V, everyone else. Great. Hey, New York Leagues, I got to thank you for those videos. Really, thank you. We'll work it out. I'll got some interesting intro videos. I really do appreciate the effort on that. Melissa, hey, what's going on? Everyone else, glad that you guys can make it. So crypto is really nothing as at the major markets roll over here and give us a follow through on the downside after last week. Let's jump really quick because we're done with crypto. You're done with crypto for now. And here's S&P going right back down to a 3-bar. Look, are we going to close under 39.87? I would say so, unless you have some spectacular rally back. You go from a 3-bar breakout, no continuation. Look, it was there, but no continuation, to now 3 bars down. That's tough. And the big support, I think it's, that's your line for the year. You violate this 39.50 area, 4,000 generally. Okay, this comes right back down. It's just unbelievable, the chop in here. No, haven't hit our targets, haven't hit 41.38, which would be a potentially large opportunity for a massive rejection. Are we rejecting it early? We're going to, remember I said yesterday we would come out of the zone? We didn't. We didn't get enough of a downside. Today we will. I mean, we're already 77 on HSI on the daily for S&P. So I'm going to respect that once it triggers, and we'll come in on Thursday. But that then says, okay, once that triggers, that's your maximum upside resistance now. 40.18, 40.20. So I just, again, I think it's a situation where you're quickly back down into even the low range of the uptrend like that. You're just coming back, retesting this channel. It's pretty much like that. Now, we do have a couple of interesting things to look at. I mean, the SPY we talked about this SPY generating a shark pattern on the daily a couple days ago. Let me take away these other lines and we can really hone in on it. And so, and I said, look for the breakdown. If we break that uptrend, it goes into a full type 1. Really tough call, but there you go. I mean, the type 1 with a non-confirmation instantaneous rejection at 407.68. I'd have to say you go into a type 1 from here with no confirmation, just a reaction, but 379. That puts you under 3,800 on the S&P index now. Not later, but now. And you don't get to do what you wanted to do there. Tough one on running right into that pattern, but without confirmation. The key there, and something on Saturday, folks, so really let me get to this. We're going to talk about what the difference between, say, something like right here is versus there. What makes this react here and not that? I mean, we had confirmation that came well above it. I thought that would happen here. Go a little bit higher and then generate confirmation. No. But it's still reaction, and the fact that we broke the trend line, and now we have 1, 2, 3 failure. 1, 2, 3 failure. And you got to close. You close under that, the big spike from last week at 390, 39.40, 394 even on the SPY. Then there's nothing there, and everyone's going to say shoot the gap, come on back down 3 to 380, 379. I mean, it's done. 379, folks, on the SPY. Flashing a pattern. That means this whole thing from that October throwdown to the 1618, that's it. And you could even say that, all right, maybe what you're looking at is a 5-0 that gets you to there, which it is. and then back up, something like that. It real chop. I mean, this thing has been choppy since most of the month, last 30 days. You know, up hard, come back hard, no follow through, now back down at a pattern. 407.68. You know, with today's action, you got to shoot it to 379. And for some of the ones we talked about yesterday to come back and retest those big numbers, that's probably, you know, a no-brainer now. A lot of those big levels that we, you know, are saying, hey, look for these to come down. Things like, here's Disney, perfect example. Big patterns, big zones. Okay, your confirmation is all the way down here. You never checked back, so 87.58. Yeah, that this could be a full retest of the zone before we do anything. The diamonds, I think that's actually a really interesting chart because take a look. Oh, here's the diamond. The diamond chart's about the weekly registering now. All right, so this is the HSI had been trending and trending the last couple of weeks in a nice fashion until yesterday, and they just rolled right out of bed on Monday and down. Now this won't trigger, won't be official until Friday, but 343.25 is the top end, absolute maximum resistance. And if anything, target 2 at 336 is that's where we are right now, going back down. That could be it for the type 2 on the whole thing. There was the reaction, come back for the return, and now bang, up there, type 2. Another one where another week or two down, and then you come all the way back down. You come back down to target 1, or even better, whatever the next HSI is, and that's going to be a ways away. I wouldn't be surprised to see if we get a trigger on Friday, we get another throwdown back into this zone. You got it. Hey, thanks for the comment. Miyoshi's saying learning a lot, and the cheat sheet was great. All right, the cheat sheet. Let me just bring that quickly. Again, everything you want to get, folks, is over here on harmonictrader.com. For all of the gold members, just to let you know, the gold member information for the seminar is on the gold member page. Posted that. So access the gold members page. If you want to get access, you've purchased the program or resubscribed, you have to connect with Miss Stephanie on the Discord. That is number 4 right here. Just click the link and go in there. Now, the cheat sheet, just to remind people, great cheat sheet. Guys are talking about doing an advanced cheat sheet. I did see that. I will follow up with you guys, David and the rest. That's a free download. Just click there. Everything's a free download here on Basic Members page. And get with the software trial. So again, we talked about that yesterday. I was showing eSignal. I think everyone should start with TradingView because it's so easy and it's ubiquitous. Everyone's using it. It's accessible everywhere. And then upgrade, add one of the pro platforms. Check all of that info out. But Saturday is here, and if you want more information, there's the December 10th Saturday session. It's going to be 3 sessions, actually. Hope you can join it. Again, if you got any questions, reach out on the Discord. So let's dial it back here, and again, looking at the diamonds, I want to show 1 or 2 recent short opportunities we have lined up. Here's one. This was a 3 ideas. This is Royal Caribbean. So I posted last week was 3 short opportunities, and this was here you go. This one's now rolling over. This is a beautiful type 2, and I would really, with this kind of a breakdown, watch this for continuation. A minimum target 47.49, but Again, we could go as low as 42 on this move. I posted that, like I said, over a week ago. This week was all long positions, so and those look like they're coming into play really soon. Keep an eye on that one. Some of the other ones that the big ones continue to roll over. I mean, XLE, bag it, crude oil done. And the monthly, now tell me about that monthly candle. How do you feel about this big crab pattern at XLE right off the hop at 94? So crude oil's done, put a fork in it now. You roll over, and the only thing I want to see is a close underneath that low. Underneath that low, that's 87.29. You're under the low right now, but again, got a couple more weeks till we get out of here. But that sets up even we've had some even the real strong ones, like here's Pepsi, one of the strongest ones, period. Go to the daily time frame. There you go. This is an ABCD. I also think it's a weekly. This was a weekly. I'm pretty sure of it. Weekly butterfly. That's an ABCD. Maybe I'm confusing this with something else. But 182, 185 generally. Yeah, 185, 86. I mean, that's the exact ABCD, but I thought it was a different pattern. But we're flashing a number of these. We're flashing a number of big daily bearish patterns up here. Here's CAT on the bigger, slower stocks. Check out this. Come on. Hold on. It's taking a minute to load. There you go. Caterpillar now with the weekly confirmation. 229.73. I'm good with that. 230. You're right there, but look at the ideal behavior going on. Caterpillar. Okay, complete the pattern a month ago. Follow through, +1 with a bullish candle. All right, +2, you're bearish. Great. Now we have confirmation. Can we get a check back to 236 or 238? I want to watch that. I want to watch that. That's the only thing I'm waiting on Caterpillar. If we can get that to check back, that would actually be the ideal formation, but we're already running into clear weekly shark that look at where it's coming in as well. You're butting up against these all-time highs and you're not able to follow through with a bearish weekly pattern. Those are some flags. Definitely want to be on top of these larger patterns. Crude oil is rolling over. We knew that. We got some problems on nat gas that gave us a reverse signal, a counter HSI signal. And we'll look at those in a minute, but all of that definitely a problem. Putting pressure for now. And then here I'll follow up on one of the new ones that it was a bullish one that I posted over the weekend, which is CME Group, which is doing the opposite. I mean, amazing. It's starting to pop up into this was a long position we were talking about. And it got a little pop yesterday. Even despite today, you're still managing to push a bit higher. 187.73 off of that deep crab is a nice target. So it's kind of a mixed bag. It looks like garbage again, but you've got a lot of individual things setting up in an interesting fashion. A couple of more. I'm going to post these. Now, I want to run through some of the bigger speculative stuff. I've been talking about things like ARC and how that's just gunning to come back into the zone. That 32, 34 area, you almost got there today. I'm looking at these patterns, okay? I'm looking at this next throwdown. I do think we can throw down into this zone and trigger something at these levels across the board. Weekly time frame looks like this on ARC. Nothing there yet. Nothing that hasn't triggered HSI or even gotten oversold, but I'm looking for that bigger retest down to 30, 32 on the daily for ARC. A lot of them have set up this way. I mentioned this one too, TDoc, Teledoc. It's a big, kind of looks like crypto, right? With these big patterns, and then you got small patterns here inside of it. This is, go off the smaller one just for now. So Teledoc, now 25, come back 24 minimum into the hop level. Nothing there yet, but you see how these return phases have begun, and you're in them. It's these are the extremely broken up, crazy ones. Here's another Cathy Wood ARC favorite. This one's a little more interesting. I am eyeing this one up. CRISPR Therapeutics. It's got a bat pattern sitting at the hop at 52. You're under there. You're checking back now of that HSI. So if that's a secondary trigger, which it is, you hit yesterday, maybe you're 2 bullish days away from that being a potentially a good rebound candidate. Not there yet, almost there, trying to fill some gaps and some things that happened back in November, but you're scraping these hop levels, and I don't want to, I'm not going to dismiss these hop levels. And of course, the big ones, let's go over to the other platform here. So those are, your speculative innovation stocks. That's what she loved to call them. I don't, whatever. I'm looking at things like Google, come back into the zone. I talked about this yesterday. Let's not ignore these zones. Okay, because if we get a retest and we come back into the zone, down in here, trigger in here, it's still a valid zone. Didn't get to type 1. That would have been great, especially since we absolutely reversed the day we hit the hop. So still valid. But I'm keeping a close eye on these. Here's Amazon. All the way back down under the hop. Right now, this one filled the gap. That was the last thing at around 89.60. You're under that area. All right, treat this the same way. Okay, treat this the same way as a HSI trigger. There's the zone under the hop. Really, it is between 88 and about 91 generally. Give me 1-2 days. Give me some kind of response from here. That's what I'm looking for. I know it looks kind of scary with everything right now, but you're retesting some just incredibly significant zones that I don't want to ignore. I need to see 1-2 days of constructive behavior, hold these lows, but this is when I said scraping the bottom yesterday to come back and retest these, that's what I meant. Yeah, that's not the one I wanted. I wanted Microsoft. So Microsoft, there you go. Big bat pattern on the weekly. The daily is a type 2 as well. Again, 220 forever has been the big number. Are we going to come back down and hit it one more time? It's trying to do that. This is another one, tough to see. I can isolate all the different patterns, but it's like this. You break that, then you're going to come all the way back to 220. But 220 should be it. I mean, all of these major zones in the FANG, the Microsoft, the Meta, the Amazon, I expect us to be negotiating those as opportunities. Even though it's coming back, even we're down again in the trend, whatever. So be it. We're deeply oversold. Now I want to look for this next throwdown phase. You're going to come back, retest some lows, okay? But these are the lows I want to look at. If Meta came back, we talked about hey, at least 117, but the weekly is like 97. And so you could come back and brush that 97, 90 one more time. HSI looks like it wants to come out. That's amazing. Those are big, big levels. I really feel like you've got to understand that this whole devastation that started a year ago is going to continue. It has continued all year. It's going to take time. And I mean, from the hop level, you have to go right and give that 30 weeks. You are 7, 8 weeks into this. So if you get a retest of that zone, week 8, week 10, don't be surprised. These are bigger levels still shaping up. Let's look at VIX, because the VIX finally did the thing we were looking at. This could explain a lot of the current situation. VIX down around 19. We had a bunch of numbers around 1980, and under, it was 1790 to basically 21 is the larger zone. Here you go. And let's go to the daily. So now we get a poke above the downtrend. We're retesting a Gartley. We had a bat. We had a shark. You have all these different patterns that we're generating. That again, 1950 or so is the level. 1739 hop level. That's your absolute make or break across the board. But we're just looking for this thing to give you 2 green candles, to give you a breakout, which, okay, today's the first VIX breakout, legitimate 3-bar breakout since back here on October 22nd. And it looks like this, here's, okay. There's today 1, 2, 3. So you're above 3, above 21 on the VIX. You're trading 22. We could get a target 1 to 2780. Now it's a go. After quite a slide, the last 5 weeks, straight down. I mean, this is even on the most of the up days, the candles were still ended up bearish. Yeah, this is what? Day 5? Day 7 since only the 7th green candle, and it's the largest by far since the top. Since that peak, it's the largest bullish candle we've seen at a zone. So that means something. You have some things stacked behind you now that said, okay, maybe volatility can open up here and at least give you a type 1 reaction. That is absolutely the kind of the delayed thing that we were starting to look at back here at around 23, 22, but it just kept on dropping and dropping. Again, today's the first day. Today is the first day that's really broken out above a 3-bar range. And that 3-bar range is something, it's one of the things we'll talk about on Saturday. Why is that so important, and what we should see going beyond that? Really like to see it at a pattern zone, because then you've got some structure behind that movement. Really quick. Now, this whole scene on interest rates is convoluted, but I do want everyone to pay attention, and it's not too difficult to understand. Just follow the 10-year yield. I know a lot of people are talking 2-year and it's inverted and whatever. Look, we've got major patterns on the 10-year yield that if you really want to know what's going on with the market, are we going to have a problem with interest rates? It's like this. If you bounce off of here, off the hop, you go to target 1. If not, and we don't have confirmation, this is why it's not in the cards yet, that anything under 345, then that means this fails. Pattern fails. It's trying to slide out of here, but I'll stick to 345. A close under 345 in rates, and you're done. And rates then drop back to the longer term levels we talked about. This big pattern on the 10-year is also another thing that we're anticipating. So again, Everyone's looking at rates, they're looking at VIX, try to get some idea of when the next drop will be. Well, we're going to know really soon what the rate scenario is going to look like. Because even if we come back into this zone, we could go back as low as 3 or 2.9. HSI on the weekly is also deeply oversold. So take a look. That will require at least another week or two to get out of that. You're down here at the 0 mark. That's the teal line. Each one of these bars is a week. So you're 1-2 weeks in since you dropped in. You'll take 2-3 to get out of there. Give it time. I mean, that's something to watch if you're worried about the market. Beyond that, gotta wait for these pullbacks to finish up. Oh, the other one I didn't talk about was Tesla. And look, Tesla weekly, you're retesting the terminal bar, you're retesting all that support. 178 is a big number. Here's the daily time frame. The only thing that concerns me is we did get the HSI to register yesterday on the close. So more time, the dreaded more time against this, the whole daily thing. This bat pattern. You can't see it. The hop level is down here. There's a few things. 185, 180, 178 maximum. I think if you take out the low here, and you can't turn around individually, then look, the weekly Gartley is going to rule. The weekly Gartley is, XA at level 188. You should not be violating any prior lows from this point forward. What's the prior low? 166. You're 178 right here. I'm looking here. I'm not in the same scenario as a lot of people are in terms of overly concerned on these massive zones. But you do have some signals where, all right, maybe 169 or 170, but that should be about it. I mean, Tesla should not be dropping much below these ranges. If it does, I mean, you're actually where you are right now, 175, 176. Should be holding against, because you're there in the zone. You're in a major zone with all of this stuff. Keep an eye on it. I'm not ready to go on Tesla yet, but give it time. Some of the other ones, I posted this one, this Shopify, okay, because it's a big weekly shark pattern. Looks like this. Oh, hold on. Let me bring that up. Here's Shopify. And now it's coming back down against the big weekly shark pattern. Here you go. So 38.82 for something that has been decimated. Go to a 4-hour chart. I'm looking for entries on this pullback now. There's a ABCD off the low, maybe 36 off of this pullback. But again, you see we don't have any HSI. If you go on your 4-hour charts for a lot of these like Shop and Tesla and some of the others, they're oversold right now, but they haven't come out of the zone yet. And with that target, maybe 36. But I do think this throwdown move, this next throwdown move, if it's into the end of the year, if it's into early January, is the one to be looking for. I kind of like where the market is. I really, I'm not, I think the damage has been done. Oh, here you go. Shopify's got a, what's that, a daily bat? There you go. Yeah, 36.87 off the daily bat. Can we do a type 1, type 2? How many have not done that lately? We say, oh yeah, we'll do that and that. For now, until 36.87. Still down. S&P is off 63 at the moment. Nasdaq's off 215, and the Dow's off. What's the Dow off? 312. All right, not bad. Really not bad for the last 2-3 days. One or two more that I find pretty interesting. Here's XLY. Okay, it's consumer discretionary. Another one, massive patterns, goes sideways, but now you're going to come back and check back. This is where your delayed execution, delayed kind of extended stabilization. I'm looking for, again, XLY, a retest, come back down your 139. Get to 137 or fill the gap at 135. Because there's a lot of levels down here. We could just be banging against that support zone before we do something like this. Come down off of the last couple of years levels, 135 to 137, and then go do the move towards the end of the month into early January. The other one here's one that's interesting. Healthcare, XLV, Healthcare Trust, massive Gartley. So this is a better one for short position. And there's a couple of interesting healthcare setups here where XLV, Healthcare Trust, registered yesterday. We didn't get a check back. Check back would be 139. But I'm looking at that one and go into a type 1 reaction on healthcare. And you've got things like UNH with some big patterns. There's a big shark pattern at 544. Amazing. You had that perfect confirmation early in the beginning of 554. And I know this has got some bigger, even bigger patterns here. Should be something up there. Weekly. The weekly HSI at 550 is your general resistance, and that's one of the strongest stocks of the last 10 years. Keep that in mind. The other one, Bristol Myers, pretty interesting. The defensive stocks are trying to flash these. Oh, let me go to the other platform. I know what that is. Here's Bristol Myers, BMY. I said BMY. Come on, my fat finger today. BMY. There you go. HSI checked back with the shark on the weekly. That's pretty nice. Pretty nice all the way at the hop level. But look, your shark is the confirmation secondary is up there around 81.30. I think the daily time frame had, hold on. I forget which, did I confuse that with Baxter? No, certainly not. Although Baxter's on the downside there, not nearly as good as BMY. What was the other? There's something else up here that I was, I'll have to come back to it. I had something, there's a butterfly and something up there. Yeah, there's a big Gartley in that XLY, Evan. That's right. It's a broadening wedge, but the Gartley is what to focus on, and you do have confirmation. Let me take a quick peek because I forget. Something popped up last night, and it was a weekly pattern. It escapes me. It escapes me. I think one or two more. Here's Pfizer. I know Pfizer's retesting some bearishness. There you go. That's the end of a type 1 shark, but that's not what I'm looking at. This is what I'm looking at. Yeah, it's a type 2. Here's Pfizer. It's actually just hit the type 1 target back in October to come down. It took a long time, it took almost a year to reverse and hit that low. Now we're flirting with, you want to see that go to 52 and change to complete the type 2 off the crab pattern. So your safety stocks are flashing some bearishness. Trying to come up and clip that would be a big event. Scotty, what's happening? He's saying actually the healthcare lines up with what the major healthcare institutions are thinking. Medicare will be paying 4.4% less next year. Most healthcare systems are preparing for that. As someone who is a professional in the industry, I trust his judgment. So yeah, you know what? There was a lot of professionals who were saying stuff similar about the fall of this year. Beginning of this year, I heard rumblings. People were saying, yeah, recession coming by third or fourth quarter. So they made plans accordingly. I mean, almost like a self-fulfilling prophecy, quite frankly, if they can get through it. But so be that. I mean, that's setting up. It's type 2. Come on up a little bit more and then be in a perfect spot. Couple more. Let me go really quick. Let's double back to the nat gas situation. I didn't talk about that since last week, but really since the counter HSI signal, we said scrap it. So here's what happened on the daily time frame. Let's remove it all. This HSI signal came in at the shark target 1. We said that was it. And we have dropped like a rock to go back and retest the zone. This is a type 2 now, folks, but I need to show you where we're going to go with this. I should have covered this yesterday. I'm going to retest that low. That's 478. So there goes the 6 and the 9. 6 as support, 9 as resistance. 466 come back to the hop for the type 2 shark on this move. And ever since then, you know, we not only did we get the check back, we got 1, 2 bearish candles that followed it where, you know, at that point, you know, this thing is coming back. Again, be something I'll feature on Saturday. It's a critical strategy. It's really helpful to be kind of the, you know, ring the bell, time to get out, time to move on type of signal. And that's what that was saying. Oh, it's already oversold, but we got to let that come into the target, Claire. I agree with you. And Boyle was the same deal. It was a check back and a counter HSI signal now at the hop. 2681. Give me HSI. It's oversold, but that needs to reverse. And again, just understand this, that when you get this deep oversold and you're in that zone, you're waiting for it to come out because that's the first signal. But that will take another 2 days to do so. So I'm not, you know, let that do what it will. You hit the structural limit today, but we need confirmation probably over here in about 2 or 3 more days. So keep an eye on it. It's I really think that that's starting to at least get into the deep oversold situation. Nat gas is probably showing us a little bit lower, and then another opportunity. That first shot, okay, so be it. That was it. It gave us the counter signal to jump out. Did I know it would drop like a rock like that from 40 to 25, whatever? No. But that's the counter HSI signal at work. That's why we said that. And if you go back to the 28th, a week or so ago, check out what we were saying on that. But it's now down back to the hop where I'll start looking very soon for another opportunity off of that level. I just want to see a green arrow pointing up. Scott Culberson says nat gas can be played both with Boyle and KOLD. Yep. The KOLD is the inverse. And I actually have that on the screen. KOLD was check this out, was a bullish HSI. So the KOLD is the ultra short Bloomberg Nat Gas ETF. It's kind of like inverse Boyle, but that too, I mean, that had a pattern all the way down here. But look, there's the confirmation. That's the ideal delayed confirmation. Check it out. This technique can be used on any pattern, any time frame. But remember, we're always looking for pattern confirmation. Then green arrow that says, all right, start the process. Let's go. They check back right in that area. We're looking that at that point here, you're on. Okay, you check back. Let me blow this up so you can really see the zone. It's important. Every price bar is significant. Every price bar, especially in the right spots, is critical because you have this. There was the check back. This is KOLD, ultra short nat gas. Checks back 1, 2 green candles there. That says around 1058. You spent a week or so. Okay, then you ran into a counter HSI signal that took you back down. Short-lived. But that might have pulled you out. And if that didn't, this one should have as well. But I think that one could have pulled you out and you would have scratched your trade and been done with it, quite frankly, because that's the same thing as here. But then you come back on the KOLD last week. You checked back perfectly. And then again, if you want to wait 1 and 2 green bars after the check back, so be it. Then you're really going, and that's the follow through you get. That check back with the pattern, 1, 2 green bars, or even a breakout scenario somewhere after the fact, okay, is all designed to really kind of hold off on the drawdown and put you in the spot where the development's happening. It's important, really important. So with this, your KOLD thing, I would say you go back, retest 25, much in the same way that nat gas has to go up, has to go down more. This can come up. And like I said, it's 25. But all of the check back and the 1, 2, all set up quite nice. I mean, that's the thing we want to look for in every market, any time frame. Just get yourself set up properly. We were looking to roll on those long positions and just wait on energy, on crude, because nat gas, crude oil, even look at like UK oil. UK oil has been rolling down, continuing to give us lower targets. This was another bearish counter HSI that ran against us. Bullish at 89, pops up, counter HSI, come all the way back into the zone. This can go as low as the hop on 74. I think that's probably not even much to consider. So not even looking at that until 74 or lower. And then, we talked about this crude oil, light sweet crude. That could be as low as 65 for this move. So the pressure on crude oil is lower. You see it in the stocks. You see it in the spot price commodities. I think this is where inflation comes off. You get a massive drop in crude oil. Yeah, it'll be definitely deflationary for the markets initially, but then it'll set up. It'll change the deal. It'll change the dynamics. This is why you see interest rates falling off at the same time crude oil is. That's a real interesting aspect. It's kind of dangerous because the first move is to basically let the air out of the tires in your inflationary sectors, and that's going to pull asset prices down until they can start getting back into easy money. 74 on UK oil, I would say. Light sweets 65, 68. Pretty quickly. I think this drops. We saw that XLE really quick. ExxonMobil and the other ones too. Those are Those are big Dow components, Chevron, Exxon. Look at ExxonMobil now. It's off 10. There you go. Some big patterns, 113, 114, now 104. I say under 100, maybe as low as 90 on that move for Chevron. That's been one of our better markets that we've been in front of for sure. And that's coming to fruition quickly. This could be one where profit taking comes into play as well. Because if people see this thing is going to give up gains, or even crude oil historically has this ping pong effect of going from worst to first, or first to worst performers for the year. So this year, one of the top performers could go into a worst category next year, being one of the worst performers. But the big levels, for me, the monthly signals are massive. You get patterns like this on Chevron and we don't respond. What are we doing here then? What are we doing? If we're not responding to patterns like this as a big warning sign to the future price potential, I think when you see these signals come together, you see a bearish, massive monthly bearish crab that halts, absolutely stops the price action progress of the prior year and a half, and you stop literally at that level, 173, 175, can't really get above that for 6 months, those are signs. And you're early in development, so think of it this way as well, that if we see the pattern, which is here, and then we say, okay, 30 bars, 30 months of consolidation to type 1 reaction, all right, you're in that, you're waiting through that until September 24. Now, I highlight that, okay, as a way to think about the trade and think about the position, because a lot of people were caught up, and a lot of people still are caught up thinking that this is a great place to be because of all the fundamental factors. It's priced in. That's what the pattern says to me. All of that fundamental supply deficit, increased demand, lack of supply that is going to push these stocks is priced in by the pattern. And now we're seeing the effects of going in here, and you're now 9 months later. If anyone's ever had a baby, you know what 9 months can take. Well, 9 months to make that baby is done. So for me, I'm out of energy. It was a good one. 2021, good year. Okay, and a lot of those I got out earlier. Here's the other one, the big one. I've been out of this one, but this was a great winner, but it's done now. Marathon Oil. The weekly or daily, it's a Gartley up here. A Gartley or bat? Bat. Daily. Daily, it's a bat. Thank you. Come on up. There she is. And yeah, here we go. So we're 27.52. We've been saying 26.75 since last week. It's a nice one. It's a great one. And again, I'm going to do this 2-bar technique a lot on Saturday. But look at what happened here. Okay, here's pattern completion on Marathon Oil right there. There's our HSI. 1, 2. That you couldn't ask for a better ideal harmonic pattern setup. So now come back and retest the extreme high right there. What's the high there on that bar? Let me blow it up even larger so everyone can see. Bring that into view. Right there. The high is 31.17. Did we check it there? No, that bar was 31.16. Amazing. And it does matter. So that's the check back bar right here. Now we need 2 bearish candles, 1 and 2. So the real number in the zone, and the way that I've been saying to optimize this, is really like 32.70. And that held firm. This is a technique I want everyone to study. We're going to go into it on detail on Saturday. I'm looking at ways to automate this 2-bar confirmation. Sometimes it's right at the check back. Sometimes it's a little bit below. But if we're in the zone, that's what we're comparing. You know, if I'm looking at a pattern like this, is it 31 or is it 34? Well, the zone, the confirmation, all that says probably around 32, Scott. And then you get like, here's a 3-bar breakdown, no follow through. There's a 3-bar breakdown with continuation. Or you could wait for all of that and then just hit it in that zone. Because what should happen, and it's pretty clear once you get that, these highs are your stop. You get no check back. You should not get any violation. And 2675 is the target. It's usually the ladder of the target 1 or harmonic strength index. Whereas HSI, it's almost there, but it's going to come into the zone. That can easily drop 75 more cents, hit our target, finish the reaction. So keep in mind on that. Maybe later, maybe there might be another after this massive correction or big reaction. Maybe we get set up with some bullish patterns down here. That would be nice, but not there yet. Right now, you're in full type 1 reaction. I found it. Here's the big one I wanted to share with everybody. This might become a 3 ideas really soon. Check out McDonald's. Not the daily, although that was a beautiful one. Weekly. Or is this monthly? Hold on, bear with me. Is it McDonald's? I found the greatest butterfly that just completed, and I can't remember which one it was. I'll have to come back to it. Here's Mondelez. Here's one I do know about. Mondelez on the daily. Hop level at 67.70. Book it. I like that one. Okay. I'm down on that one for even just a little kickback reaction to 61 off of the, really tough because you had no confirmation to the right, but now we're about to trigger a 3-bar. If we get a 3-bar reversal on Mondelez, and that's a close under 67.43, you're there now. That alone is sometimes enough to be a 3-bar reactive trigger, and we still go for target 1. Some of the things I'm going to do on Saturday are to show some things that happen even if you don't have ideal HSI, especially at the hop level. Because a lot of these hops are reacting, they're quite tradable. But be aware of that. Several of these have set up like this. I think 1 or 2 more. 1 or 2 more. We can go for a full hour already. Amazing. Procter & Gamble. This was a long position for us back in October that hit its target. It looks like this, a type 2 up here. 151.38. Did you get there? Oh, we might have got there in the pre-market. 150.77. I haven't hit it yet. Almost there at target 2. And it's a type 2. It's a beautiful type 2. But keep that in mind, because this is, I know I talked about this a while back, but okay, just needs to break the trend line. If you're in that as one of our 3 ideas from early October, you're just waiting for the breakdown. You could wait for, you're about to break a 3-bar range under 148, under a close under 148. Yeah, you could bail and be done with that. Scott, can I know your active current positions? Let me see here. Well, holding a bunch of Philip Morris, but that's a long-term thing. I have the Petco, Wolf. This was another 3 ideas. There's a couple of them off of that low just last week. We might get a 3 bar. This might be end of just a simple reaction. I'm watching that one. You guys know I've been in Philip Morris forever. What's the other one? Got a here. This is one I've been out of for a little while. I was in this a few weeks ago. I got out of that early, but Coca-Cola. That's one that's been a while. But that one too. Look, this one, wanted to show this because this one went beautiful Gartley. But it's flash. It's another HSI flashing. It just went to target 2 on that one. Did want to update. I still think we could get this to come back where Coca-Cola on the next retest of 55 is a massive opportunity. And I'm looking at these, but they're not where they need to be. I've got a few others. The RCL short. I started today out with that. That's one of my short positions. I don't want to spend too much time on that, but this is weekly is going to trigger, but the daily is really what again, today I featured this already, but keep an eye on that one because you're at the hop level. It's got all of the reactive possibilities here. I think 47. That's still 9 from current levels. Those are a few. I could feature some more. I want to finish up. We've already gone on over an hour. I'll come back on Thursday. There's 1 or 2 interesting ones I'm looking at. I mentioned that I've been looking at recent cannabis pop in these stocks. Not much there yet. Go on like the weekly. You have all of these scraping super long-term levels. Weekly HSIs, but they, I don't, even despite that most recent pop, there's still, these have been super disappointing. Some people asked me about this recently. This canopy growth CGC, it's a massive type 2, but like crypto, you really triggered there at about 250, and then you generated another bearish HSI. So that's not going to do much, even though, look, we were looking for CGC. We caught this move last year to do something like this and then come back down to 14 and then go again. Well, guess what? It massively failed. I mean, massively failed its confirmation. The confirmation came in at about 11. And this would be the only spot around 289 that I would even consider looking at that again. I mean, there's some big ones. The other one was Kronos. Had a big one as well, big pattern here, but running into another bearish HSI. It's going to take its time. Yeah, this was a bat. Remember this bat? Some of you guys remember. I was crazy about the cannabis stocks a year or so ago because of these massive patterns. Well, they did, or maybe it was 2 years ago. No, it was just a reaction, and then had to come back down, and it failed. These failed. So keep that in mind. I'm not really on that. They've kind of popped up, but they're not in the right position. 1 or 2 more. Here's something that's trying to get into position, but not quite there. CSX. Look at this bearish weekly. It's a type 2. Now, this is really tough to see because it's coming off yet another test. There's the type 1. Tricky, comes back for a type 2. Now what is this doing? I was looking at this. This had a few back-to-back patterns. Had a bullish and a bearish. It's now bearish. We tried to go down here around 28 earlier this year for a type 1 move. But look what happened. The type 1 up to target 1. comes back down, and guess what? 3211's flashing a bearish pattern. I'm not going to mess with that. And that's pretty tricky for this setup because there's type 1 and type 2 should be exploding. So 3211, you're now 3108. Should be firm resistance until we come down well under 30. 28 to 29. That's not good for transports. Look at something like FedEx. Here you go. Check this out. I like FedEx on the next retest. So what is this, folks? What is this set up here? Real nice reactive move, but that's all it is. Target 1 was 182.73. What'd it do? It hit, got rejected. Yesterday was the first 3-bar breakdown, just barely, but it did. It cinched it. That it set us into the return. So FedEx back to 158 is more than likely. But down here, and this is another one of these that's going to come. It's either going to come in January or it's going to come, say, in March of next year. But it's coming, and we're going to come back like a lot of these did back in October or September, retest the zone, and then at that point, you're 2 of 2 off a massive daily pattern that I want to start looking, and maybe as low as 134. But you're in return phase now, and it just started. So reaction, type 1 reaction from October, that's over. That's it. And then again, if you were in that reactive move, it was just a reactive move. Yesterday and this morning sealed the deal. Come back 158.25. Until then, you wait for that return. David's asking, any idea on the cosmetics industry? Those tend to do well in economically tough times. I think let's just stick with the biggest ones. Stick with the biggest stocks. Let's stick with the big market movers. As I say that, S&P just went to new lows for the day. Now down 65 at 39.38. Dow down now 400. Look, this is a position for FedEx that's a lot like some of the ones we saw back in August. They did a pop, they did a roll, come back down for the type 2. If it's Disney, Disney did that. Disney was at that target 1. Take a look here. If FedEx is Disney, you're right there, and you have to go down there. Disney, like I said earlier today, come back to 88, retest HSI now, and hold this low. You get the check back to 85 or so, or 87, sorry. Yeah, 87.50. You need that check back because that would then confirm this whole support area, but it's down until that happens. It is down. I want to see this come back down. I do think this is an opportunity down here, but it's back down at the confirmation. One or two more. Here's another one. I meant to, this is one of these high flyers, Dash. Check it out. I think I mentioned this last week with a little crab pattern. We're not getting the type 2. Here's something that's a little frustrating because we get the reactions and we get back-to-back patterns. Why doesn't that go back and give us a type 2 and then go down? We'll know really soon. There's, look, you're 1-2. You're checking back now and you're already failing under 52. Forget it. I would say it's probably going to, you slip under the 50 level, you come all the way back down and retest the crab in a type 2. That would, again, it would be a better scenario here. You're not getting ideal bearish behavior to come back and retest and then dump. But there's patterns there, and they're down here. So if it gets ugly over the next 2 to 4 weeks, which it could, we're actually completing a lot of type 2s across the board. I think it's going to look worse than it really is. If a new HSI up or down arrow forms, would I ignore the previous arrow? Depends if it's in a zone. If it's in a zone or not. I know what you're saying, but it depends if it's, corresponding with some kind of bigger zone. Let me see if I can find something that really exemplifies what I'm trying to say here. I think what you're saying is, like, if we have this one now, do we ignore that? Has it been checked back? Do you have a confirmation? Did it respond off that area previously? Because that matters. That stuff's important. I think Meta has a situation like that at the moment. Let me look at Meta. Meta has a daily triggering. Was it a 4-hour? Maybe not, but this can be used. So the question is, if you have an HSI signal like right here, and it did check back on Meta around 123 on the 4-hour chart, does that make these signals irrelevant? And I would say no, because if we come back and retest them and form another signal, well, then you get a collection of building support. That's around 109. It depends on, is there a pattern there and what happened in that area. If it's some obscure thing that doesn't really link up with any pattern, just let it go. But I look, the stuff we'll talk about Saturday with the 2-bar, the check back, everything. I mean, I think that's, or even just a simple breakdown, being patient for some kind of individual bar breakdown after the check back is helpful from jumping into a knife situation. One or two more. We've a long session today. Long. Here is it Netflix? Netflix had a 4-hour up there at, what was that, 320 and change. Deeply oversold right now. I mean, I'm not touching that. There's really nothing here on Netflix that, no. I think I got a couple of these confused. Well, Netflix on a 5-minute today, here you go. Nice bullish crab pattern, but no HSI. I was looking at this morning, actually, for a potential long and didn't hit it. No HSI confirmation. And sometimes that's all right. Look, here's HSI. It does not register. That's where the pattern completed on the open, but nothing here. I'm going to have to come back to this. There was one or two that that escaped me at the moment, but they won't on Thursday. Do multiple HSI arrows in a zone make that more relevant? It helps. It helps. We're still, here's the thing, and that's another great question, Darren. He's saying, okay, what happens if you have like 2 signals? Even independent of patterns. Yeah, it's helpful. For example, something like this. Like here you have, we have a pattern here, but look, what he's saying is you have 1 and then 2 HSI signals. Is that more significant? I'll say that it helps, but we still look for the same set of check back conditions. If you're just going to trade on HSI, or you're just going to look at the market with HSI, and it's very helpful, especially for day traders on a 5-minute chart. What's your last 5-minute HSI is a question I ask myself every day. And so if I'm looking at this, something like here, I'm still going to wait for the check back, like there, and 1, 2 bearish candles. But what happens is you develop another one en route to doing that. So maybe it just takes a little bit longer. But the fact that you've got 2 of those signals and price action stalls or checks back and gives you the confirmation definitely reinforces the area. I mean, even as a short-term trade signal here, you got that massive drop down. And you could trade markets HSI to HSI in that fashion. I just think if you're going to trade it from, say, bearish signal to a bullish or entry to exit, when you get your exit arrow, as soon as that arrow manifests you and is illustrated, you're out. Something to think about. The HSI is helpful, though, on the 5-minute for day trading. And again, I'm going to go over that on Saturday in depth. Come into like today, perfect example. Just falling out of bed, no confirmation for that pattern. I do nothing. Or even better, if we had a 5-minute bearish, you go with that. We had a bearish pattern. NVIDIA was the one I wanted to look at that had something. It was what, 2 days ago, 3 days ago? Even NVIDIA right now, here you go. This is for you folks, okay? NVIDIA right now, let's say we're playing like just daily options on a 5-minute HSI, and I say 5 minutes specifically, it's like that. Just you get the bar, mark that 160-115 resistance, scalp it out. You catch a point, you double your option, your daily option plays something like that. But this should drop until you get the next HSI signal bullish, and you're not there yet. But that's a great one, and that's for today, 161. You're 160.50 at the moment. 5-minute chart. Nothing else there. But this was the that was the 5-minute chart. It was like a couple days ago. That crab pattern, 172 right at the hop. Let me go. I think I'm going to save the rest for Thursday. Thursday, giveaway Thursday. I'll give away some gold memberships so some of you guys can attend the seminar, a couple books. But do get with the software now. Go to, where are we going here? Bear with me. Yep, go to the basic members page. And just get with the software. That's what I'm going to leave for everybody. Even before you get into the books or anything, get with the TradingView software, because everything we're doing is responding to the triggers automated off of the software and the levels. That's how we frame out our trades. That's what we want to look for every time. Right now, a lot of things I showed you today are in a spot where it look like they're trying to return down lower now. I say that as S&P's making new lows for the day. Here we go. All right, everybody, come on back Thursday, 12 noon.